I'd like to talk to you today about the OPM principle. That word gets kind of thrown around quite a bit, but I think the majority of us don't really understand what it means and how it works. So I'd like to talk to you about that. OPM, what does that mean? It stands for other people's money. How does that come into play in the marketplace? Well, the foundational structure of all banks, trust companies, credit unions, for example, is OPM. They use other people's money, our money. We deposit it in their banks or their trust companies or the credit unions, and then they do things with it. Life insurance companies are another example of that, the OPM principle. They don't take direct deposits like a bank or a trust company or credit union. However, they do collect monthly insurance premiums from their customers to insure their life, their cars, etc., etc. Well, that money goes on a balance sheet and it's lent out in various ways, just like other financial institutions. So the OPM principle really is a foundational structure of growing your net worth, growing your cash flow, and every other aspect of your life really it has an impact on it. So let's talk a little bit in detail about it. The principle of OPM started long ago. It goes back to biblical times really. And it came about in that people would at that point store coins or different forms of currency that they had at the time in depositories, and those people would pay rent to deposit them there and keep them protected so they wouldn't get stolen. And then it kind of evolved, and the depositories started looking at it and saying, well, you know, we have all this cash here in whatever form it's in, what can we do with that? And that's when they started to apply what they call leverage, way back when. Shakespeare actually wrote about this in The Merchant of Venice. He had a character called Shylock, and a lot of people are familiar with that play. Well, all that Shylock did was he leveraged capital and he lent it out. So it's kind of started way back then and evolved over time. How does it work? How can you participate in that? Well, I like to think that everyone in the marketplace, every investor, every individual can become a quote-unquote banker, so to speak, where they can apply the OPM principle and apply the laws and the upside benefits of leverage. For example, today, most of our relationships with banks and trust companies and credit unions are one whereby we take our money in there, we have our deposits, our paychecks deposited every week or month, and then in turn, that institution does something with that money if we leave it there. A big step to becoming a banker, quote-unquote banker, an OPM expert, is to reverse that relationship. We teach people how to leverage their assets, just like what a bank would do. And rather than put money into a bank or any other financial institution, we teach them how to borrow from the bank, leveraging their assets, and then in turn creating other assets that will create positive cash flow for them. That could be real estate, it could be the stock market, mutual funds. There's a variety of different instruments that you can use, but the foundation of OPM is what has to come first. With all those institutions, they obviously have a great deal more leverage than we do under banking rules, trust company rules, credit union rules. They have up to 20-to-1 leverage on their capital, which means that if you deposit $1 into an account there, they can actually lend that out 20 times. As individuals, we can only do it 1-to-1. So it's very important that we understand and learn the foundation of the OPM principle, how it works within the financial system, and how we can apply it to our own financial situation to improve our cash flow, our net worth, the growth of our asset base. Over the last 1,000 years it's evolved, and while I know that a very small part of the population actually takes advantage of this principle, and that's something that we will talk about at length.